If you had a major emergency that you had to take care of during your retirement years, could a Roth IRA actually be your lifesaver? We're going to talk about that today in our Tuesday tip and how this could be possible, so stay locked in. Hi, my name is Carson Graves, certified financial planner and president and CEO of the Retirement Education Center, and I want to welcome you once again to our Tuesday tips, where today we are going to be discussing how a Roth IRA can come to your rescue in your time of need in your retirement years. Now, I can tell you that when you retire, it will be nice to think that once you do retire, everything is just going to go perfectly as planned, and there will never be a situation where you have to dip into your retirement savings. But unfortunately, what I can tell you with my experience of being a certified financial advisor for over 24 years now, that is definitely not always the case. And so we're going to talk about how having some tax diversity within your retirement plans can be your lifesaver. So let's go ahead and jump into our lesson. So, how exactly could a Roth IRA save you? Well, the biggest question that you might be asking yourself, if a Roth IRA can save you, why would you put any money into a traditional IRA at all if the money is going to be fully taxable anyway? Well, here's the reason why. There are income limits for anybody who wants to just directly contribute to a Roth IRA. If you make over $161,000 as a single tax filer or over $240,000 as a married filing joint couple, you cannot directly contribute to a Roth IRA. Therefore, you would be left with no other choice but to contribute money to a traditional IRA in which there are no income limits to do so, and then convert that money into a Roth IRA. So let's go ahead and take a look now at an example of how a Roth IRA could actually save you. Let's just say you have a retiree, a single retiree. They need $60,000 a year of income. They're going to have Social Security income of $30,000 a year that they're going to receive at their full retirement age. And they have a 401k or an IRA with a balance of $600,000, and they're going to have a distribution rate of 5% to come out to be $30,000 a year for the additional income needed. Now, in this particular situation, you have your Social Security income of $15,000, which is one half of that benefit that they're going to include, plus $30,000 of your distribution from your IRA and your 401k, minus your standard deduction of $16,550, which is going to come out to $28,450. That's going to be your taxable income. Now, in this particular situation, your marginal tax rate is going to be, as a single filer in 2024, in the 12% tax bracket. But here's another thing. Now, up to 50% of your Social Security benefits will become taxable income as well, because as a single person, you are earning over $25,000 of taxable income or combined income. So, up to 50% of your Social Security income will become taxable at that particular time. So let's go ahead and continue our discussion here with this retiree. Let's say they're going along, they needed $60,000 a year. They're getting the $30,000 of income from their Social Security benefits. They're also going to receive that other $30,000 from their retirement plans. But then they have a major emergency. Maybe they got really sick and they didn't have enough money to cover the medical expenses, or maybe they had a troubled child or they had to use this money to get them out of trouble. But nevertheless, they needed $25,000 to bail them out. Now, what we're looking at, they're going to pull that money out of their 401k or an IRA. So they still have their Social Security income of $15,000 that's going to be included in their total taxable income. They're going to also have now $55,000 of income from the $30,000 they were pulling, plus the additional $25,000 for the emergency, minus their standard deduction. But now their taxable income is over $53,000, pushing them into the 22% tax bracket. And when you are a single filer and you earn over $34,000 of income, of combined income, up to 85% of your Social Security benefits can become taxable as well. So we have a double whammy here. Their marginal tax rate is higher now, and more of their Social Security benefits have become taxable. So let's go ahead and take a look at a different scenario here. The same income of $60,000 is needed. $30,000 will be coming from their Social Security benefits, where now they still have a combined portfolio of $600,000, but $300,000 of it is in a pre-tax situation, and the other $300,000 is in a Roth account in which the distributions are going to be tax-free. And let's see what happens now when they have the emergency of $25,000 in this particular situation. They still have the $15,000 of income that's going to be included in their combined income calculation from Social Security. Now they only have $15,000 from the distribution from their retirement accounts that's going to be included, and that's going to be from the half of the money that came from a pre-tax account from their 401k or an IRA. None of this Roth IRA of $15,000 is going to be included, and none of the $25,000 that they pull from the Roth IRA is going to be included either for the emergency that came about. So when you subtract out their standard deduction, their income is only going to be $13,450 of taxable income for the year versus the $53,450 before, because they had to pull money out of a fully taxable account. Not only will none of their Social Security benefits be taxable now, but they've also lowered the effective taxes that they would have to pay on their income back into the 12% tax bracket as well. Please note that these videos are created for educational purposes only, and that you should always seek out your own financial advisor, your own tax advisor, and your own attorney regarding your personal situation. Also, if you are looking for an independent fiduciary advisor to help you with these types of complex financial matters, we highly recommend that you utilize the links in our description below and go ahead and schedule a 1-hour free consultation with us today. And we will also like to hear from you. Let us know what your thoughts are regarding this particular subject matter and leave any questions or comments in the section below. And if you found this information to be beneficial, all that we ask is that you subscribe to this channel so it can continue to grow, like this video, and share it with others.